Tesla reported revenues of $16.934 billion for the second quarter of 2022, which was almost $400 million more than Wall Street had predicted. Tesla anticipates even higher statistics from enhanced Q4 production and deliveries, which could drive up its revenue and possibly force its stock price to soar as high as $1,000. The company's third-party earnings were slightly above this. Greetings to all, and thanks for returning to Everything Tesla stock. Tesla recently released its third quarter financial results. Even if it fell short of experts' projections, the automaker's $21.45 billion in overall revenue is still a remarkable achievement. The corporation reported overall quarterly revenue of roughly $21.45 billion, up 26.7% from the second quarter of this year and 55% from the Q3 data of the previous year. In addition, the automaker's profit of almost $3.3 billion represented a substantial increase over the $1.6 billion it reported for the same period in 2021. Elon Musk disclosed his updated expectations for Tesla and the reasons behind his belief that the automaker would soon surpass large corporations worldwide to become the most valuable company in the world during the firm's earnings call for the recently ended quarter. What are the future variables that will drive Tesla's revenue growth? To find out, keep watching. Prior to diving in, remember to like, subscribe, and activate on notifications in order to stay informed about all that Tesla is up to. Tesla announced earlier in October that it delivered 35% more cars in the third quarter of this year than it did in the second. Tesla's E3 earnings showed notable ramp-ups in car production and sales, notably at its major markets where disruption from the pandemic had slowed down production, leading to lower sales, even though the company did not reach forecasts from some big analysts. Even if there are signs that Tesla is continuing to advance and maintain its production rate, the company's stock price has not reflected this, particularly in the last several weeks. The car company's shares have drastically dropped, most recently falling by around 50% from record highs set in November of last year. This has investors panicking because they believe there may be a global economic downturn and a potential crash in Tesla's stock price. Elon Musk, the CEO of Tesla, has promised investors that the firm will have a positive Q4 after the release of its third quarter profits. He also stated that Tesla is on track to surpass major international corporations like Apple and Saudi Aramco. According to Musk, Tesla will eventually be worth more than the combined value of the two businesses. I see a potential path for Tesla to surpass the combined value of Apple and Saudi Aramco, he stated. That being said, it does not guarantee that it will occur or be simple. As always, I believe it will be really challenging and need a great deal of labor, some really innovative new items, mass expansion, and luck. With Apple's market valuation of $2.3 trillion in Saudi Aramco, an oil producer, at $2.1 trillion, Tesla's is currently valued at less than $700 billion. Although Musk's remarks suggested that Tesla might be worth more in the future, it is clear that the automaker must perform far better in order to surpass these businesses in terms of market capitalization. Saudi Aramco, the oil company based in Saudi Arabia, recently released its financial results for the second quarter of 2022. The company reported a 90% rise in net income year over year and a $18.8 billion dividend that will be paid out in the third quarter of the current year. Throughout its market cycles, the company keeps improving its financial position and keeping its excellent investment-grade credit rating. In a similar vein, Apple reported second quarter revenue of approximately $97.28 billion, up 8.59% over the previous year, and $1.52 in earnings per share. Undoubtedly, these are extremely large earnings, but Musk thinks Tesla has enough initiatives underway and in the works to eventually reach even greater milestones down the road. How will this go place? Tesla has been steadily increasing the volume of electric vehicles it produces at its Gigafactories, and its new plants in Texas and Berlin have reached important benchmarks. Recently, Tesla's Berlin plant revealed that it has increased production to 2,000 electric vehicles per week for the first time. The The company's Texas facilities also achieved a noteworthy milestone at producing the 10,000th Model Y since the facility debuted in April. Similarly, the analysts believe that a significant effort must be made to raise the price of Tesla stock since it has been declining over the past few weeks. Musk hinted that Tesla would be planning a share buyback in the near future, although he did not specify when. Even in the worst-case scenario for next year, he did concede that Tesla could undoubtedly undertake a repurchase of between $5 and $10 billion. He continued by saying that Tesla is likely to carry out some significant buybacks, even if the upcoming year proves challenging for the business. Additionally, Tesla's FSD beta software is gaining traction. It will be fascinating to see how that develops as EV companies and users realize the benefits of having this software and how simple it is for their EV experience. If Tesla keeps up its current pace of growth in both car production and delivery while still offering its customers value, it may someday reach the kind of high revenue levels that Musk has predicted. Given the size of Tesla's market capitalization, the company's shares might eventually soar beyond $1,000. Automakers have undoubtedly had a difficult year as they contend with bottlenecks in the supply chain and inflation. Due to problems with the supply chain and shortages of essential components, the majority of automakers had trouble increasing customer demand earlier in the year. Similarly, the severe consequences of inflation have made the market situation even more challenging. While the recent economic downturn may indicate a decrease in demand, Tesla maintains that it has no issues meeting demand and is instead concentrating on increasing car production. Delivering cars has become more costly and complicated, according to Tesla, as the automaker's main limitations are related to the materials used in its batteries and its ability to transport them. The automaker added that although manufacturing increased by 50% in the fourth quarter, deliveries increased by less than 50%, posing some logistical issues. With inflation still having an impact, it is undeniable that Tesla is struggling to fulfill its delivery commitments on time. Nonetheless, the carmaker has demonstrated that it is able to weather difficult times. In a recent conference call, Musk reaffirmed this to analysts, saying that although Tesla is not recession-proof, it is resilient. In order to allay investors' worries that purchasers would be deterred by the dismal global economy and the high cost of Tesla automobiles, Musk also provided reassurance over the company's strong demand in the fourth quarter. Musk claims that demand for Tesla's upcoming fourth quarter is very strong and that the company plans to sell every vehicle it produces going forward. Given that Tesla is focused on rapid expansion, it is highly unlikely that the current economic slowdown is influencing its plans in any way. It is evident that Tesla is working to meet its stated goal of a 50% increase in sales this year over the 936,172 vehicles it delivered in 2021. In spite of increased manufacturing costs, unanticipated delays in several of its plants, and logistical challenges, Tesla, the world's largest mobile maker by market value, beat multiple analysts' projections and estimations for its third quarter earnings. Despite the unfavorable foreign exchange impacts the company faced as the U.S. dollar strengthened versus other major currencies, its adjusted EPS increased 69.4% year-over-year to $1.05. While setting such a high financial objective is admirable, YouTuber Dave Lee contends that Tesla needs to support it with execution. According to Lee, Tesla is a hardcore technology firm that is taking on some of the most challenging issues facing the globe. As a result, Lee thinks the company will be able to increase its growth margins and add more value for its consumers. Despite worldwide economic downturns, Tesla is expanding quickly, and investors are keeping a close eye out for indications that consumer demand is slowing down as inflation soars and interest rates rise. Musk's pledge to create a business valued at approximately $4.5 trillion may not be sufficient to change negative attitude, but it is the glimmer of hope that most Tesla investors need to maintain their bullish outlook on the auto industry. Additionally, Musk left out Tesla's Optimus and AI project from his list of potential future contributors to the carmaker's high revenue. Although this seems wise on his part, there's no doubting that a Tesla bot might boost and intensify revenue even more, and if it works, we might see that occur. Do you believe that in the coming years, Tesla will surpass both Apple and Saudi Aramco in size? Please share your thoughts in the space provided below. Additionally, if you'd like to see what Tesla has been up to lately, click the next video that appears on your screen. I'll see you there.